Get ready, crypto fans. The market is a whirlwind, and we've got the inside scoop on all the seismic shifts hitting your favorite digital assets. From critical support levels being tested to entirely new strategies emerging for corporate treasuries, this is the information you absolutely cannot afford to miss. We're diving deep into the action, bringing you the analysis that cuts through the noise. Stay tuned, because the future of finance is unfolding right now, and you're about to get the crucial updates. First up, we're dissecting Bitcoin's latest price action. Has the king of crypto just broken a multi-year support trendline, or is this a classic fakeout designed to shake out the weak hands? We've got the charts, the analysis, and the expert opinions to help you understand what this massive move could mean for your portfolio. Next, we're shifting gears to explore a fascinating trend in corporate treasuries. Forget the old playbook of simply holding Bitcoin. A new wave of companies is turning to Solana, leveraging its speed and yield-generating capabilities to actively grow their assets. We'll break down why this shift is happening and what it means for the broader crypto adoption landscape. And that's not all. We're also looking at how MicroStrategy's innovative preferred share offerings are creating a bullish circle around Bitcoin and examining the strategic growth of Bitcoin mining companies like Cipher Mining amidst evolving market conditions. Stick around for all these stories and more. Don't forget to hit that like button, subscribe for all the latest updates, and ring that notification bell so you never miss a beat. Bitcoin price plummets below key trendline. Is it a fakeout? Bitcoin has just experienced a significant price drop, falling below a critical multi-year support trendline. This development has sent ripples of concern through the market, reigniting fears of a potential bear market, and prompting many investors to question the stability of the cryptocurrency's upward trajectory. Historically, Bitcoin has often rallied along a parabolic support curve, which has served as the foundation for its bull runs. Temporary breaches of this curve have not always signaled doom, provided that momentum, as measured by the Relative Strength Index, RSI, remained robust. However, the situation becomes dire when Bitcoin loses both its parabolic support and RSI support simultaneously. Such breakdowns in the past have preceded catastrophic crashes. In 2013, a similar pattern preceded an 85% drop. In 2017, it led to an 84% decline, and in 2021, it resulted in a severe 77% slide. Currently, Bitcoin has dipped below its multi-year trendline support, but the RSI is still holding above its own uptrend, offering a glimmer of hope for a potential recovery. The true test, according to analysts, will be whether the RSI can maintain its support. A break below this level could potentially send Bitcoin prices tumbling towards the $80,000 mark, aligning with historical price retreats observed at the end of previous years. Despite the bearish signals, some prominent analysts are labeling the current breakdown as a potential fakeout. They argue that even a sharp dip below the $100,000 level could be a strategic move by the market to shake out less committed investors, often referred to as weak hands, before a strong recovery phase. In this optimistic view, the $80,000 to $100,000 range might not be a ceiling for bears, but rather a springboard for the next significant upward movement. Further bolstering this perspective, the Pi cycle top model, a historically reliable indicator for Bitcoin cycle peaks, has not yet signaled a top. This model, which tracks the intersection of two key moving averages, has accurately predicted major tops in 2013, 2017, and 2021. The absence of a crossover suggests that Bitcoin may not have reached its cycle peak yet, with some analysts forecasting a potential top around $280,000. The market is watching closely to see if Bitcoin can reclaim its trendline support and if the RSI can hold firm, determining whether this is a temporary setback or the beginning of a deeper correction. But is this dip a sign of weakness or a clever market maneuver? Next, we're exploring how corporate treasuries are shifting their strategies, moving away from Bitcoin and towards Solana for exciting new opportunities. Solana surges as corporate treasuries ditch Bitcoin for yield. A significant shift is underway in the world of corporate finance, as a new generation of public companies begins to bypass Bitcoin in favor of Solana for managing their treasuries. This isn't merely a trend, it represents a fundamental change in how businesses view and utilize digital assets. While early adopters, exemplified by MicroStrategy, treated Bitcoin as a digital gold bar, a valuable asset to be held passively in a vault, today's forward-thinking companies are seeking more dynamic applications. They are moving from a store of value mentality to a store of velocity, aiming to deploy their digital assets actively and generate returns. Solana has emerged as the preferred platform for this new strategy, largely due to its design, which inherently rewards network participants through staking. Companies can earn annual yields, often cited between 6% and 8%, simply by staking their SOL holdings. This transforms a static balance sheet item into a revenue-generating engine. The progression is clear. Bitcoin served as the initial entry point for corporate crypto adoption, offering a hedge against inflation. Ethereum's upgrades then introduced the possibility of earning yield. Now, Solana is being adopted as a comprehensive financial operating system for businesses. Companies like DeFi Development Corp., Apexi, and MicroStrategy's are at the forefront, viewing SOL not just as an investment, but as operational capital. DeFi Development, for instance, aims to maximize its SOL per share by actively staking and participating in network infrastructure. Apexi, holding over 2 million SOL, is reportedly generating approximately $65,000 daily from staking rewards alone, a stark contrast to the passive holding of Bitcoin. The technological capabilities of Solana also play a crucial role. While Bitcoin can process a limited number of transactions per second, Solana is engineered to handle tens of thousands, comparable to high-performance financial systems. Transaction fees on Solana are a fraction of a penny, a stark difference from Bitcoin's potentially high fees during peak times, which can exceed $17. This efficiency is critical for treasury departments managing high volumes of transactions. Furthermore, Solana offers near-instantaneous transaction finality, with confirmations in less than a second, compared to Bitcoin's potential hour-long confirmation times. This speed and certainty are highly attractive to major financial players like Visa and PayPal, both of whom have integrated with Solana, lending it significant credibility. Even traditional finance institutions like Cantor Fitzgerald recognize Solana's advantage for companies building on-chain operations. However, this strategic shift is not without its challenges. Solana's price volatility is considerably higher than Bitcoin's, posing a risk for conservative treasury management. Past network outages, though less frequent since 2022, also raise concerns about reliability. Critics point to the high cost of running a validator as a potential centralizing factor. The most significant hurdle, however, remains regulatory uncertainty. While U.S. regulators classify Bitcoin as a commodity, the SEC has identified Solana as a potential security in legal filings, creating a complex gray area for institutional adoption. Moreover, earning yield through staking introduces tax complexities, as rewards are typically taxed as income upon receipt, requiring meticulous accounting. Despite these obstacles, venture capital continues to flow into the Solana ecosystem, signaling strong confidence in its future. The upcoming Firedancer upgrade promises to further boost network speeds exponentially. Companies choosing Solana over Bitcoin are signaling a belief that the future of corporate treasury management lies not in passive wealth storage, but in actively utilizing efficient, high-performance digital asset platforms. But what does this mean for the future of corporate digital asset strategy? Our next story looks at how MicroStrategy's innovative financing is creating a bullish environment for Bitcoin, and will also examine the growth of Bitcoin mining. MicroStrategy's preferred shares fuel Bitcoin's ascent. MicroStrategy, now operating under the name Strategy, has significantly reshaped the landscape of U.S. capital markets in 2025 through a series of innovative preferred stock offerings. Tickers such as SDRK, SDRF, SDRD, and SDRC have collectively raised approximately $5.6 billion year-to-date. This figure represents a substantial 12% of all U.S. IPO issuance, both preferred and common, underscoring investor enthusiasm and Strategy's pivotal role as the most prominent corporate proxy for Bitcoin. The performance across these preferred stock offerings has shown variation. with SDRF leading the pack with a 31% lifetime return, followed by SDRK at 19% and SDRC at 8%. SDRD, however, has lagged, posting a negative 6% return. Despite these differences, the suite of financing vehicles has successfully provided Strategy with a diversified base to fund its growing Bitcoin treasury. As of August, the company holds an impressive 632,457 BTC, solidifying its position as the world's largest corporate holder of the digital asset. The firm's enterprise value relative to its Bitcoin net asset value, NAV, currently stands at 1.6. NAV is calculated by dividing the enterprise value, which includes preferreds and convertible debt, by the company's Bitcoin holdings. This ratio has seen a slight decline over the past month, correlating with a more than 25% drop in Strategy's stock price from its July peak. Year-to-date, Strategy's, MSTR, shares have gained 13%, while Bitcoin itself has seen an 18% increase. This performance gap highlights both the company's leveraged exposure to Bitcoin's price movements and the market's valuation of its debt and preferred stock obligations. Beyond Strategy's bold financial maneuvers, other U.S. IPOs have also performed strongly in 2025, contributing significantly to the market. Notable examples include Bullish, BLSH, and Circle, CRCL, which have further reinforced the year's theme of resurgent risk appetite and innovative capital market strategies linked to the cryptocurrency sector. These preferred share offerings not only provide MicroStrategy with capital, but also serve as a unique mechanism for investors to gain exposure to Bitcoin's price action indirectly. By investing in these preferred shares, investors are essentially betting on MicroStrategy's continued accumulation and holding of Bitcoin, while also benefiting from the company's operational strategies. The success of these offerings demonstrates a growing demand for diversified investment avenues into the digital asset space, moving beyond direct ownership of cryptocurrencies. This approach caters to a broader range of investors who may be more comfortable with traditional financial instruments, but are seeking exposure to the potential upside of Bitcoin. The diversification of Strategy's financing also insulates it somewhat from the direct volatility of Bitcoin, allowing for more stable growth and operational planning. The capital raised is crucial for continuing its Bitcoin acquisition strategy and for funding its broader business operations, which are increasingly intertwined with its digital asset holdings. The market's positive reception, despite some performance variations among the individual preferred issues, signals a strong confidence in MicroStrategy's long-term vision and its commitment to Bitcoin. MicroStrategy's unique approach is certainly making waves in finance. But what's driving the growth in Bitcoin mining and companies like Cipher Mining? Cipher Mining, riding the tailwinds in Bitcoin's mining sector. The Bitcoin mining industry is experiencing a period of significant strategic growth, bolstered by favorable macroeconomic conditions and specific sector tailwinds, making companies like Cipher Mining, CIFR, increasingly attractive investment opportunities. As the price of Bitcoin demonstrates resilience and potential for further appreciation, the economics of mining become more favorable, incentivizing expansion and efficiency improvements across the sector. Cipher Mining, in particular, has been strategically positioning itself to capitalize on these trends. The company has focused on securing access to low-cost energy, a critical factor in the profitability of Bitcoin mining, which is an energy-intensive process. By establishing operations in regions with abundant and affordable power, Cipher Mining aims to minimize its operational expenses and maximize its Bitcoin yield per mining rig. Furthermore, the company has been investing in state-of-the-art mining hardware, ensuring that its fleet remains competitive in terms of computational power and energy efficiency. This technological edge is crucial in an industry where hash rate dominance and operational costs directly impact profitability. The macroeconomic environment also plays a vital role. With inflation concerns persisting and traditional markets showing volatility, Bitcoin is increasingly being viewed as a digital store of value, similar to gold. This narrative boosts demand for Bitcoin, which in turn supports higher mining rewards and a more robust mining economy. As more institutional capital flows into Bitcoin, Driven by its growing acceptance as a legitimate asset class, the mining sector benefits directly from increased network security and value. Sector-specific tailwinds include advancements in mining technology, such as more energy-efficient ASICs, application-specific integrated circuits, and innovations in energy management, including the utilization of stranded or renewable energy sources. Cipher Mining's strategic focus on these areas, securing low-cost power, deploying advanced hardware, and adapting to evolving energy solutions, positions it favorably within this dynamic industry. The company's ability to navigate the cyclical nature of the Bitcoin market and maintain operational efficiency through market downturns will be key to its long-term success. Analysts are closely watching Cipher Mining's operational updates and its capacity to scale its mining operations effectively. Success in this sector often hinges on a combination of technological prowess, efficient resource management, and astute market timing. The growing adoption of Bitcoin by corporations and the increasing interest from institutional investors provide a strong foundation for the mining industry's continued expansion. Cipher Mining's strategic approach, focusing on cost optimization and technological advancement, places it at the forefront of this growth, poised to benefit from the increasing demand for Bitcoin and the ongoing evolution of the mining landscape. Cipher Mining's strategy highlights the evolving nature of Bitcoin production. That's all the top stories for today, but we'll be right back with a quick recap and your final call to action. And that's a wrap on today's market-moving news. We saw Bitcoin testing crucial support levels, potentially signaling a massive fakeout. Corporate treasuries are pivoting from Bitcoin to Solana, chasing yield and speed. MicroStrategy's innovative preferred shares are creating a bullish circle around Bitcoin, and Cipher Mining is strategically growing amidst industry tailwinds. If you found this update valuable, smash that like button, subscribe to Bitcoin Bulletin for more essential insights, and ring the notification bell so you never miss out. Plus, follow us on all social platforms for real-time updates and join the conversation. We'll see you in the next one.